Friends, good morning, everyone. And here we begin the August session of the Multimillionaire Forum. And you would recall last August we did the same session, which was on the international investment landscape. But before we go any further, let's go to the disclaimer, please. Again, this is very clear. And this time, I generally run through the disclaimer, but this time the disclaimer is very, very important because we are talking international investments, and when we are talking internationally, we will normally have to take some few names. We will not be taking names of countries per se. I mean, but the thing is, to make a reference, we'll have to mention that this country did this country is doing that, so on and so forth. We will of course not go into individual companies or individual particular specific funds. But which we have to say this thing because obviously this is an educational session, and we are not promoting any particular company or product in this session. And the rest of it is pretty self-explanatory. That I mean, this is something new that we had to put in our disclaimer. Our registrations and broking, sub-broking, etc. details, which is all there. But anyway, net, this is not any sort of investment advice. Purely educational, it's free for all, and it's open for anyone who wants to learn. Right. So with that, we move on to our subject for the day. We are talking about international investments. Why are we talking international investments? This probably is the best time to really broach upon this subject. This time meaning this time of August 2026. The reason for that is very simple. And I'm going to rewind 2 years back, go back into June of 2024, when we had the results of our general election in India, and where the ruling party at that time, BJP, was thinking that they will have a groundbreaking majority. They will pretty much sweep the entire parliament. And the basic slogan was "400 par, ab ki bar 400 par," that sort of a thing. Now, unfortunately, that did not happen. They did not get the kind of majority that they were expecting. June 24 was that time, and that one day itself, the market dropped dramatically. But somewhere, that was not the trigger, but that was the first event. And subsequently, we had multiple triggers that came along, and which actually made the Indian markets, look really compromised and poor in terms of performance vis-a-vis the rest of the world. So June 24 is our results. September 24, globally, everything started falling down in terms of the market mood and all of that. By December, we were hoping that the world will dramatically shift because it was expected that Donald Trump would take office, which he did. And pretty much in the first week of January 2025, when we did a session, we were all extremely bullish, thinking that, here is a very capitalist and a progressive sort of thinking president, and he's going to do a lot of great things for America and for the rest of the world. Whether they are great or not, today we are about 2 years into that, and history will tell us whether whatever he did and the decisions that he took, whether they were helpful or not. But long story short, January 25 came tariffs. Later on during the year came the Operation Sindoor, and one after the other, things were going bad. As if that was not enough, and in 26, what happened was the war with Iran and Israel and USA. So we've seen all these events unfold before us in the last 24 months. This fold of events obviously has made a lot of things unstable. Our market was probably the worst performer, and which is exactly why we in India need to think of international investments, because, like I said, this is the most opportune time. Why? Indian markets didn't perform right from June 24 to now. I mean, very, very mediocre performance. The second thing that happened is that because of all these political turmoils, global wars, etc., we were hit very badly on the oil front. We import most of our oil, and we've done separate sessions on this. You may refer to the previous ones. But in terms of oil, we had to import a lot more, as much as our import bill between the previous last year and this year, or rather 24 and 25, has actually shot up quite dramatically. If you look at the financial years, we would be almost up about 40% to 50% in terms of how many dollars we went spending, which is why we had even a situation where the Honorable Prime Minister said, don't travel, save the dollars, try and do carpooling, don't do destination weddings, etc., and so many other methods by which you can save the precious dollar stock that we have. In the light of all this, is it that the same story has transpired around the whole world? It's not the same. The world has been a very, very different place. So what we are going to do is we're going to take you through different sections of this global situation. We have whatever is happening. All of you are aware of the political and geopolitical background that we are living in. But within this situation, what has happened around the world? So let's take a first glimpse at Mirai has done a very interesting job. So incidentally, we found a very nice presentation and report from there. So that's the first slide coming up for you, the first data slide. So Zari will put that up, and in that you will see how different markets have performed over the years. Not only that, specifically 24 and 25, and the year to date of 26. All right. So while the screen comes up, you will see that most of these calculations are obviously in US dollars, because when you are making a comparison, of course, in terms of returns, which market did the highest returns. But what is also important is to make an even comparison, we have to convert everything into dollars. So here's an interesting analysis done by this Mirai asset, and we found that in this presentation. Now, as you can see, I'm just going to go hovering around, with my pen. And what you see here in these blue boxes, can you just raise the screen a little bit so that we can see up to rank number 10? Can you just do that a little bit more? Yeah. Yeah, perfect. That's great. Thank you. So, as you can see, I'm just going to draw a line so that you can see India. This is India. Okay. And then India was here. I'm just sort of circumventing India so that you know that not every year India is obviously the best performer. And there you go. So year to date, 2026, India is, negative 15, this dollar terms. Obviously, because the dollar also just appreciated around the whole world, and because of oil, we've had a lot of pressure on our currency. 2025, India was at 10%, 24 was 8, and 2023 was 20. Remember, when they're talking of India, another very important thing to keep in mind, they are talking of the main index, which is, we're talking about Nifty only. We're not even talking about Nifty 500. We're not talking about mid cap and small cap, where in the years of 22 and 23 and 24, we have had exceptional groundbreaking returns that we made. Actually, not groundbreaking, fortune-changing returns that we made in India in the small cap and the mid cap space in 23 and 24 especially. All right. But this is only and specifically talking of the large representation of India, which is the largest companies of India, essentially Nifty. And that's the performance that you see. So as you can see, 24 was, it's very sorry sort of performance, right? In the last 10 years, not even once we were at the top in terms of dollars, and we've been at best like a mediocre market, if you can see. Nothing to change the whole perspective that India is a great place and there's a lot of growth happening. There's enormous amount of GDP growth happening, and in our lifetimes we will see a lot of returns that we will make. But then we must see even the larger picture, right? So we tend to look at the larger picture from an India point of view. Today we are going to see the larger picture from the global market point of view. So you will be able to appreciate the difference. Now I'll keep this drawing here. But then in the meanwhile, obviously, we want to look at number one rank. So the number one rank in 2026 is South Korea. And this is also, see what's happening is South Korea has been falling with the last few occasions. 25 was South Korea, again, 75% returns. And as much as USA market in 24 did 23% return, Japan did 28% in 23. So there are some great returns. In 2019, China did, as you can see, 36%. And, this one doesn't have an average score. But the thing is, markets like China, Korea, etc., are, places that we should not, generally speaking, ignore. Even USA has got a lot of things happening, in its space. We will talk about all of that and more as we sort of move along. So for the time being, let's come back to our presentation. And we've understood that India is not the only place to invest. And because we got very poor returns, and I'm just repeating for the ones who joined a little bit late, uh, we're a great market, but in the last 2 years, experience teaches us that we need to have some of our money, some part of our portfolio internationally, basically in dollars or in different currencies, so that we have different exposures. Just the way we take exposure here in India in terms of large caps, mid caps, small caps, we also need to have maybe USA, Europe, Asia, Australia, Japan, you know, some of these components as a part of our overall portfolio. So that's the real idea. Moving forward, just to kind of give you, a summarization. Of course, it helps us globally. Previous one, it helps us it helps us globally because we've got money everywhere. So even if you think about today that your money is in gold and silver, it's also not in rupees. You may have invested in gold and silver in rupees, but the price is dictated by what happens in dollars. Internationally, whatever is the price of gold and silver is the way your price is dictated in India. So gold and silver also is a very indirect way of actually hedging against the rupee by having parking a certain amount of money in gold and silver, because you know for a fact, although you're going to get an Indian price if you've invested in an Indian ETF, and if you are internationally based out of Dubai, like some of you are, and any elsewhere in the world, you could actually pick up direct dollar-based contracts of gold and silver. And that way, that itself is also like a beautiful diversification that's happening into commodity markets globally. So that's also like a great advantage to have. So global diversification, not only in terms of stock markets, but also commodity markets and bullion markets. There is so much and more available around the world. We'll talk about that also. Uh, if there is a way to identify high growth markets, why not go into that? Again, like what we saw in terms of Taiwan and South Korea in the last couple of years, Hungary's been another market which has done very well. USA market did extremely well. So those places also provide us some sort of a profit advantage and economic advantage vis-a-vis what's happening around the whole world. And the best part about all this is that today we can very very easily invest internationally, even sitting here in India. Just the way you're buying, things in the Indian stock market on your phone, you can pretty much do the same thing internationally. We'll speak about that also. And as you know, the best part of this discussion is the Q&A, which happens, after the session gets done. And we'll talk a lot more. We'll even try and share a lot more information on screens and specific, ideas that you might want. Okay, so what's the landscape? USA is a $75 trillion market. We are a $4 trillion. So USA is obviously, as much as almost 20 times larger to a little less than 20, but say just to round off, 20 times larger market. If we have like 500 products, you probably have 10,000 products or 30,000 products to invest into, and so many options. So, I mean, you can think about it and you have access. So I think USA is just not like a great country to invest in, but it's a great country through which you can invest around the whole world. So because the market has evolved so much so in America, and today it's really the American companies or the American markets which is giving you this access around the whole world. I'll show you that in a moment. But moving on, so USA is 75 trillion, China is obviously 14 trillion, which is again about almost 4 times larger than our market. So there's a lot happening there. We may have our own opinions about China, but money understands profit. So basically, if you have a company which is data center, semiconductor, robotics, technology, or even for that matter, a food company, or for that matter, a pharmaceutical company, as long as it's making profits and as long as you have access to it, why not explore it? That's the idea. Japan is almost double the size of India. I mean, although we've become, largest or the fourth largest in terms of GDP, and we're just around, the number 4 at the moment. Japanese stock market is actually double than our stock market at the moment, and Japanese stock market is actually also a stock market which is coming out of a enormously long slumber from 1980, or it had almost about 30, 35 years of what we call as a sideways period, no growth period, from the market point of view. And now really it's coming out, and there's so much that Japan is doing. Can you just take me back to USA for a moment? I just wanted to see the number of, yeah, there's some 3,500 ETFs available in USA, which is for US and for the rest of the world. I just wanted to kind of highlight that. Okay, so let's go on. So Japan, and then let's move to the next one. Europe is another beautiful market. We may think that Europe is under recession and Europe has a lot of problems, but you see, that is exactly where sometimes great opportunities also might emerge. You've got almost 9,000 ETF product options in Europe and $23 trillion in terms of market cap. Again, it is 6 times larger than India. So the point is, there's lots to invest, there's lots of options for our money. We showed these pictures last year also in international investing. This was just to, again, remind everybody, and for the funds who are watching it the first time, this is the size of markets. We are in a 4 trillion market. We have markets which are much, much larger than this, right? All right, let's go. So what we have shown you is so far is the world market performance. Okay, now let's kind of show you some idea into ETFs. And, can you show us what ETFs are? By the way, just for the ones who are not aware, ETF is an exchange traded fund. It's a beautiful product. It's a beautiful idea. To give you an example, if you wanted to, let's say, invest into Nifty, what you would do is from the mutual fund route, you would buy the Nifty index fund. And if you wanted to do the same thing on the stock market, you would buy a Nifty ETF fund. ETF is exchange traded fund. That's what it stands for. It's manufactured by the same mutual fund, which is providing you with the index fund and all the other funds that you have been invested into so far. It's just a different way of investing in that. And that ETF essentially comes and sits in your demat account. Now, with that logic, and meanwhile, you can put up the World ETF screen for us. With that logic, what happens is you will see that through USA, like I said, there is just so much that we can invest around the whole world, right? And what happens is now, if you wanted to invest in, say, we're going to be compelled to take certain names here. Can we just go up? Are we right on top? How have we filtered this thing? Okay, well, so can you please just increase and first show us what is this? This is, by the way, TradingView. TradingView is a free tool. It has paid versions also. Can you just open the whole thing? So I want to even show how people can do some research. Yeah, that's great. So what happens is TradingView is a website we use it a lot of time. Paid licenses give us a little more access to detailed information, but a lot of features that as an investor, if we want, is pretty much available free of cost. So what we are seeing is we're seeing ETFs around the whole world. Can you remove this USA filter? Yeah. And what is this? These are all based out of US, correct? And we have as much as how much? Well, what is that number? 6,000? 5,000? I can't see it very clearly. But yeah. All right. So that's where it is. And now you've got so many funds, right? Now, these are all leveraged funds. Can we just go to non-leveraged funds? Can you just filter on non-leveraged? So what happens is, okay, wait 1 second. We'll show everybody one by one, okay? So go to asset class first. Okay, go to asset class. Okay, so now here, if you want to see equity-based funds, commodity-based funds, you can all sort of choose from here. We're just into all categories. So that's something that we want to show you. Focus. Go to the next one and see how we can choose from here. Now, within this, if you want commodities, and then within that, if you wanted copper, for example, then you could just click on that and you will see that those kind of ETFs will show up to you, which is why I said USA is such an amazing market. There are thousands of products there. Niche. Go to the niche. Okay, go down, please. Now, in niche, I mean, if you wanted to invest in agriculture, if you want to find out which is, for example, apparel or automotive manufacturers around the world, an ETF for that, and then, those kind of options are also available. If you are bullish on pharmaceuticals, maybe you can search that. Go to holding region. Okay, so around the whole world, if you want a specific geography, you can do that. So in that sense, you get the idea, right? That TradingView is a beautiful portal. When you have some time, do have a look at this. And this is where we can actually pull out and identify some great products to invest into. How to do it? Yeah, we'll come to that in a moment. Leveraged, can you go to leveraged and go to non-leveraged only? So leverage basically means that this is a situation where the ETF is got $100 and then it's also borrowing another $100 so that risk and return just doubles up. So even that's kind of allowed there at that point, which is something that unheard of here. But like you can see, these are some of the returns. I mean, these returns are like absolutely crazy. This is some shipping ETF, as you can see on top. Number one, performance for the last 1 year has been some absurd amount. I mean, four-digit returns. I mean, it's crazy. But anyway, let's look at semiconductor, for example. That's a little lower down, 128%. Go further down. So semiconductor is obviously a specific sector-based thing, right? Now, there you have South Korea in front of you. So can you take your cursor to South Korea as I speak so that everyone can see? This is South Korea. Yeah, that is South Korea, and that returns about 100% in the last 1 year. Okay, let's look at countries. There is artificial intelligence. I mean, these are just such fabulous themes and beautiful arrangements that we can even think about. This is what Nomura Emerging Markets Equity. Okay, let's see if there's any other country coming down. It's easier to relate to a country. Okay, this is again another Korean fund. See, Korea has been a great market. Actually, Korea mein, there's something I wanted to show in Korea. Just go up to the Korean market. Not this Matthews Korea, the previous one that we saw on Korea. Yeah. Okay, this is a Franklin ETF on South Korea. Okay. See, look at, I mean, this is just the index. Okay. Look at the 1 year returns, 107%. Great, right? This is last 5 years return is about 62%. And last 10 years is about 99%. Obviously, uh, don't get enamored by these numbers. Last 10 years, 99% means divide by 10 is about 10% return a year. Last 5 years is 62% return, means divide by 5, and you get a return of close to about 12%. But last 1 year has been fabulous. So it's not that don't get I mean, or overawed by this that we've got 99%. So compounded returns could be much different, but that's the point I wanted to highlight here. Last 1 year has been a significant game changer for Korea. Okay, now let's go down, please. Let's see if there's any other country that comes up. Okay, there's a lot of semiconductors. See, by the last 1 year's thing, you can even see what's happening. Semiconductors, copper, I mean, these kind of commodities, energy kind of ETFs, these are the ones which are making money and which have done some exceptional performance. That way, one can even understand which is the focus area for the world's biggest fund managers. Okay, go down. There's something on nanotechnology also. I mean, we are just absolutely spoiled for choice, right? There's just so much. That is in front of you is Taiwan now. Taiwan. Show keep Taiwan on. Okay, now Taiwan, very interesting market. Okay, look at this last 1 year, and this is last 1 year as we speak. Okay, so this is rolling 1 year, 1st August 2025 to 1st August 2026. That is 73%. But last 5 years, look at this 107%, which means divide by 5, 20% per year. Look at 10-year return, 261%. Such a small little, stock market of the world, Taiwan. But of course, Taiwan has one of the biggest semiconductors within its index, and that semiconductor itself has done so much, the returns are there. But see, as a simple layman investor, what do you make out of this? That if Taiwan has done 260% in 10 years' time, should we not have Taiwan about 2% of Taiwan in our portfolio, or maybe 3%? It's an idea worth considering, right? Okay, let's go down. Let's see if we find something else and interesting. Um, all right, okay, further. Okay, now look, this is very interesting. Global lithium and battery technology. So if we think that electric vehicle is going to be the way forward, and Europe is buying electric vehicles at a rapid pace, or rather adopting electric vehicles at a rapid pace, it's going to happen here also sooner or later. With the issues that we saw with cars and the E20 and the cars not being ready and all of that, I think more than half of the Indian population will at least think about an electric vehicle, if not buy it, in the next 2 to 3 years. if they are going to buy a new one. They will all be thinking about it. So if we are, for example, very, very positive on that area, maybe lithium and battery technology, which is what supports the entire EV infrastructure, comes around there. So you get the drift of it, right? I mean, this is the whole way that you can actually do a lot of fundamental data on this. Now, we are not drilling down further, but for example, if you wish, you can even see which stocks are a part of, let's say, this lithium and battery technology, for example. In that stock, you can even further drill down and look at the profitability if you want to identify a particular stock to invest. So, for example, semiconductor is a great theme, right? Let's say for the next 5 years. Now, within semiconductors, I can go to a semiconductor ETF, click on it, and it'll open the whole portfolio for me. Once it opens the portfolio for me, I can go into a independent stock. I can then further drill down and look at the balance sheet of the stock. And then for a stock where I see that the sales has been growing rapidly, the profits are doing an exceeding sort of a marathon, in terms of 30-40% a year, we can even identify such a company and consider making an investment in that company. All right. Now, how we do all of that is what we'll talk about in our presentation. Let's do that. Right. Okay. So let's proceed. Let's sort of move on. So we've given a glimpse of how to do research. If you want more, I mean, we are most happy and to again share further things with you in the Q&A session. But I just want to go through our presentation first so that everyone gets an idea of what opportunity lies before all of us to consider. Now, execution. How would we execute? How would we execute the going about, and how would we buy all these international investments? So, what you see in front of you are two fundamental routes. One is via India. Via India means you invest in Indian rupees. Okay. Uh, and in that you can invest into some mutual funds. The unfortunate bit is, while this is an option, most of the times this option is not available. The reason for that is the 7 billion limit imposed by RBI on all the mutual funds in India, saying that, look, if we've reached this limit and therefore you can't buy any further. It's very unfortunate. But then what happens is, and again, don't be disappointed because the number of funds are also not so great. I mean, in the sense you have a handful of funds, something better than nothing. That's really the scenario there. So even if you have an opportunity to, Japan fund is open or Taiwan fund is open, it might get open because some investors have redeemed, and it's only those investors who are redeeming, their units will be available for purchase by new investors. So it's a very tiny window sometimes, but nothing to worry about. I mean, nothing, no love lost, basically, with this area not being available to us. Similar to ETFs in India, we've got about, again, like a handful, literally like less than 10 ETFs, which are international ETFs, which you can buy with the Indian stock market. Again, the problem which we've seen is that, the spread is quite large. So then that leaves Gift City, and I want to spend a little bit of time on Gift City because what is happening in Gift City here is that everybody's thinking about it, and it's like a new species. So we will talk about that a little more in detail. But let me just finish this other option before you say that this particular picture is complete in your mind. So from India, mutual fund ETFs, not really a great option, although it's available, but practically it's not available. Gift City, it's available, but you and I have to decide whether we want to do this or not. So we'll hold that thought for there. Now, via USA, this is like absolutely easy, possible, very, very scalable. You can do what you want, and it's fantastic. Okay, what I mean by via USA is, okay, what happens is there are number of brokers in India today who are offering you this facility whereby just the way you buy Indian stocks, you can also buy stocks in America through the New York Stock Exchange. So the stocks that are listed on NASDAQ, NYSE, you can buy. And stocks means only not stocks. You have ETFs also, which you can obviously buy from the American market. Now, how does this work? Very simple. Just the way you open your account with an ICICI or an HDFC or any of these other leading banks or the leading broker companies in India, you just open an international account. For all you know, when you log into your mobile app or on your computers, you will see an automatic link which is available there saying open your international accounts. Click on it, follow the instructions. The KYC is taken care of, and it's all done. It's so easy. And then whenever you want to do, just the way you add funds from your bank account to your broking account, you will just add funds from your bank account to your international broking account. It's really so simple. And then you just buy whatever you want, whichever company you want to, whether it's in America or whether it's a global ETF, or the way we showed you that research, you can pretty much do everything you want. So let's come back to the presentation. Let's look at Gift City. So what we have today in Gift City, and you can directly show us the Excel on Gift City. So we compiled a little bit of data there on Excel for you. And so we have all in all, as my team has compiled, we have got 5 retail funds, 3 PMSs, and 8 AIFs. So 5 retail funds means obviously, the implication of that is, the meaning of that is that you can make a small investment there. PMS, as generally involves a certain threshold, like 50 lakhs or so. AIF's general threshold is 1 crore and upwards. So this is just the distinction in terms of ticket sizes, but you've got this thing. Let's show the spreadsheet. And I just wanted to highlight a few things there. See, it's very important that when we are buying something, we are able to buy an active portfolio, and for which you might think it is justified to pay the fund management fee for getting a portfolio managed. Can we have this? Yeah. So what you see there is that in a retail fund, you can even do as much as maybe $5,000, $10,000 of an investment. You can have this portfolio. These are the same mutual fund companies that you are aware of, which offer you the regular mutual fund. You can do pretty much exactly the same thing for the international thing. What you have to do is make an investment to Gift City. Of course, you will invest in rupees. And I'm only talking from our point of view, and your and my point of view I'm talking from an outbound point of view, which means Indian residents with Indian rupees can invest into these funds, which will invest outside India. There are a lot more products. Okay, I want to just say this thing slowly. There are a lot more products which are inbound. So for those of you who are located outside India, and for non-Indians or people who are not persons of Indian origin, which is foreigners essentially, it could be foreigners, Arabs, English, Swedish, whatever, around the world. If they wanted to invest into India, which is known as inbound, there are a lot more options, and there's far more choices there, because that's really the objective somewhere, if you think about it, to bring a lot of dollars inside India. Okay. But we are talking of investments around the whole world. We're talking international investments from India point of view, right? Now, can you just zoom in and make this thing a little bit bigger? So as you can see, there are some retail funds. Just do a little bit of a zoom. Yeah, thank you. Okay, got it. So now, this is where you have your retail funds, just marking them, this $5,000. So you can start with as much as $5,000. But the interesting thing is, what are they going to do with this money? Like, for example, this retail fund, we quite like this one. Why? Because they've got 40% of the money in USA, 32% in Europe. They've got some investments in Japan and China also. So they kind of, checks the box. Not a bad idea. And, the expense ratio 175, which is pretty much in line with most of the mutual funds here. Exit load of 1%. Okay, this is just an example. Now, the thing is, this second retail fund, which is just investing into like NASDAQ, what this is doing is just buying the index. So sometimes buying an index, not a bad idea. It's a great thing. But you also want to, use the fund manager's skill and knowledge to sort of make better investments for you, make more profitable investments for you. Just the way in India, you can buy Nifty, but what if you could buy 10 stocks out of the Nifty, which will perform better than the Nifty? Isn't that always a great idea? So that's the same thing we're talking about. S&P 500 again is an index fund. This is an index fund. Then this is a fund which is doing, China, Taiwan, Hong Kong, etc. So this is an Asian fund, if you like. So there are very few limited options again here, but the issue with all of this is not really only this. The one issue that we found, which we thought we'll share with you, is the gains. So go to the taxation part of it. This taxation is quite crazy. Look at the taxation there. You can just select on any one. So yeah, that way. So if you can see, the taxation is there on your screen. Long-term capital gains is 24 months, not 12 months like we have for India. This is the rule for international investments. And with surcharge and all that, it becomes almost 15%. But okay, now the thing is, this is at fund level, okay? This is not at investor level, which means whatever you invest, you will get it tax-free. But the tax-free is such a mystical word, we'll almost fall for it and we'll think, oh my God, we're going to get tax-free returns, and wow, we got 20% returns last year tax-free. This is the best investment to do. We will just get hypnotized by this word tax-free. So, which is why I want to, caution everybody, don't get hypnotized by this. You are actually paying absurd amount of tax, okay? But you are not paying it, the fund is paying it. So whatever the fund is buying and selling for you, at the fund level, this tax is being applied. It's different from the Indian mutual fund. In an Indian mutual fund, if you buy the fund, you sell it, you'll have your short term, long term based on your buying date, your selling date. Okay. So that means it is known as investor level. You will have your tax at your level, investor level. But here, it's at fund level, which means the long term, if the fund manager held on to a particular investment for more than 24 months, it would be 15% tax, because they'll pay not only 12.5%, but surcharge and everything else, totaling up to almost 15%, 14.95 to be precise. But fund manager being a fund manager, he's not going to hold every investment for 24 months. They may try to do that. I'm sure they are trying to make it tax efficient so that your and my experience as an investor is slightly better and our taxation is lower. But look at the short-term capital gains. It's 43%. Okay, it's and short-term means it's less than 24 months. 24 months is too long a period from a fund manager's performance point of view. So my understanding and my analysis basically, and whatever my team has done, we think that this fund is going to pay 43% tax, which means even if this fund made 30% gains in a year, and if it's going to pay, let's say, at least 40%, not 43, but say 40% or even 30% tax, our returns will fall from 30% straight away to 20%, because we paid that much tax. And let's not forget the dividend tax. So on the dividend, they pay 36% tax. So the tax in India on these funds is humongous. So, I mean, if we had to invest money outside, I think the government has to think a little bit about how to make this tax a little more, reasonable, because this tax is absurd. I mean, that means, even to get a very ordinary 12 to 15% return, minus cost and expenses, the fund manager has to do double. And the fund manager in his head has to know that only if he does 25 or 30%, which is not really possible every year, and that also in dollar terms, then he will pay about 43% tax and this dividend distribution tax and all that. And then he'll come down for you and me as an investor to make about 12 to 15%. So versus that, versus that, the option that I spoke of, where you directly invest in USA, you could buy a stock or you could buy an ETF and decide, okay, whatever happens, 20, 30%, 40% volatility, I don't mind that. I will hold on for 2 years and I will ultimately pay 12.5% tax, because it's at an investor level, right? So that's much better. Here we found that some of the PMSs were slightly better at investor level taxation. But what were these PMSs doing? There are only 3 PMSs, you see. So, and that also then, the minimum size is $75,000. Now that could be quite a game changer. $75,000 is almost 70 lakhs, in today's exchange rate terms. And that may not be a feasible thing for everyone to start with. See, we don't mind investing a large amount of money, but you just have to start with such a big one. And where is it going to invest? Go back and show me that also. Now, see, the idea is not bad. They are going to focus on 20, 30 stocks. This is one. The other one is going to invest in US listed ETFs, but that you can do yourself also, right? Why is that? Why do you need really a PMS to do this? So it's not so complicated. And the sector is a little complicated. That you need professional help, but you're not really losing out, because, like I showed you that chart, even the country which does well, if you're invested in the country's main index, you're also better off home. And then AIF3, which is the other category. Here also, all the firstly, the investment is all at 150,000 US dollars, which means almost you're talking in terms of 1.3, 1.4 crores. That is one, immediate investment. Fund level taxation. What's the taxation here? Please, let's just have a look at that again. Okay, again, 30% and 4% cess and all of that, long term, short term, same story. So let's cancel. I mean, let's sort of, I would think let's cancel this idea. Let's suspend this idea for now. That's my submission. That let's not worry too much about Gift City, because while it's a great idea, we don't have so many nice options of products. And if we do have something, the tax is really adverse. So I would think our assessment is that the best thing to do is to make your own portfolio via USA through a broker or a bank. Go up and let's start doing that. Let's come back to the presentation quickly and show you some world markets now. All right, okay. So we're going to just give you some idea of the trend, okay? Um, a trend is very easy to understand. You can just pictorially see what's going on and get a sense of it. So let's just give you a sense of what is happening. See, this is CNX 500. Okay, the couple of things I just want to show so that you understand what's happening. This is my pen. Yeah. This is a trend. Okay, it's moving upwards. Great. Right. I'll just change the color to blue. So this is it's moving up. That's a great thing. But what is happening here? This is sideways. So how does a market move? Market basically moves up generally like that. But there could be instances where the market goes up like that and then just hangs around here and then it makes a move. Sometimes it hangs around and then makes a move. You know? So if you see, this was a flattish period here. This was a little flat period. This has been a little flat period. So Indian market has been like that. It sort of moves up and then flat and then moves up and then flat, up and flat, up and flat, up and flat. Now, prediction is next move should be obviously up. This is how you can just see a very broad level. And we are not teaching technical analysis, or we're just giving you a sense of how pictorically you can make sense out of this. Okay. So this is just the first one, just to give you a sense of India. Now look at USA. It's already in a up move, right? So till the time it doesn't become bad or you don't see a seriously negative situation, you can pretty much happily bet. I mean, USA is doing so well for so long. And what was this period? Just a second. This was this I think was the Russia-Ukraine war period where it fell. This was the COVID period where it all fell. But otherwise, see, USA market has been pretty much trended. It's not like the Indian market which went up and then little down. And this is how India was. Okay, this is Indian S&P and this is USA S&P. So my drawing is India. Okay, up and a little sideways, up and a little sideways and up and a little sideways. This is how India was moving. But look at America, pretty much up, little side, up, and then of course it went down also, and then up. Just to give you a sense. So America is doing pretty well. Still not a bad idea. Okay, let's go. Same thing, Nasdaq, very similar picture. Move. This is Japan. Okay, this is a picture of Japan. Okay, this is Japan. This is not Nikkei. This is Topics 1000 of Japan. But if I had to show you the last 30, 40 years of picture, you would see that Japan has actually woken out of a great slumber. But, we are going to look at the next 3 to 5 years, right? So Japan looks good. Chalo. Same thing for Austria. See, I don't even have to change my diagram. But, okay, interesting bit. Look at this. I mean, for such a long time, we were in a little bit of a box. Now it's breaking the box. So Austria is a part of Europe. Something interesting might be happening there. Okay, that is what this picture tells us. Of course, when we see the fundamental study and when we see the companies and when we see the growth of the country, we'll understand that things are much better. And that is why it's getting reflected in the charts, although we might think it's not so great. But the similar is the situation for some of the other European countries also. Let's move. Okay, Netherlands. Netherlands is a little different. I'll just remove my drawings here. Netherlands has broadly been like a nice, good 15-20 degree kind of a move. Chalo, next. Okay, Belgium here is very similar to what we saw in Austria, right? Was been in a box for a time, but now it's looking good. It's woken up. So it seems that Belgium is going to make some great strides. Okay, let's move. Hungary, I mean, it's been a great market again, a little bit in a box, but great market again. And it's done very well in the last couple of years. Okay, now France has been a bit of a I mean, broadly up, but it has got long flats also. I mean, if you entered here, after a few years, you'll find yourself at the same point. And France is still in a flat zone, still in a box zone. So if it comes out, it might become a great idea. This is just what the picture tells us, okay? This is just some views. Germany is okay. See, in all this, you realize one thing. There is no market which is kind of gone this and down like that, okay? Which is what I have always said. In India also, the market, so if we have a graph like this, let me just clean up this drawing. Let me draw it again. If we had a graph, just focus on what I'm drawing. If we had a graph over a period of time, the market would kind of do, it would not go down like that. This never happens. So this kind of a move, sometimes you can have a higher dip and otherwise it keeps doing what it's doing. But these are all opportunities and places today which you can invest in. Today you can take advantage of this because very easily you can invest your money, convert them into dollars, send them to America, and then start investing there. So let's just go through a few. See, Greece is also. I mean, everything looks like a. And see, the bad part is the whole world did fantastically. Only India did very bad in the last 2 years, which is what is even more kind of a compelling reason for us to let's spread our money a little bit. Okay, chalo, move forward. Same thing as Spain. Move. Same thing with Italy. See, everything is doing well. For some reason, okay, and we have a lot of reasons. The FIRs may be selling, etc., and all of that is happening. But every time, understand one thing: when you have a flat market, after a flat market, you will always have a positive market. So I think we are very positive on India also. India should also do really well going forward. But this is just to give you all these examples are available and very easy to do. So I think, Switzerland, we can close this presentation here. You just get the idea. The idea is to give you a sense of, what to expect and to see how things are moving around the whole world for you. So with that, what I want to do is we spent quite a lot of time in this presentation, but I'm sure you have a lot of questions. So let's talk about that. And one last point before you close the recording. Is the recording on? Yeah, let it be there. One last point about is the tax. You see, something that we all have to understand is whenever we make an investment internationally, we have something called a TCS, tax collected at source. So for investment purposes, 20% will be the tax. So if you are investing, say, $10,000, 20% of that, $2,000 will be additionally deducted by the bank as a tax collected at source. And they will deposit it as your advance tax to the government. Whenever you have to pay your taxes subsequent quarters and the subsequent months, you adjust that much money. So you pay that much lesser to the government. In that sense, you're okay. But in terms of cash flow, you will have to always have little 20% extra available so that you're able to make this investment. That's all. And with that, I want to close this presentation. Let's stop the recording and let's open the floor for all questions that all our friends might have.